Hi ladies and gentlemen, this is Game of Trades, and in this video we are going to be talking about the Chinese stock market, more specifically the Shanghai Composite Index. I think Chinese stocks are potentially setting up for another big bull market in the coming years. Now, of course, please remember throughout the video that this is not a political channel, but a trading and investing channel. The sole objective of this video is to highlight potential opportunities in the markets wherever they may be. Now, if we take a look at the actual nature of these bull markets in Chinese stocks, they are very sudden, they are very quick and very powerful. These are rallies that you need to catch early for them to have little risk and be profitable. And that's something we are going to be discussing throughout this video, why Chinese stocks actually behave like this compared to the S&P 500. We'll add the S&P 500 on this chart, which has a much more steady growth over a long period of time. You can see Chinese stocks are a lot more volatile and a lot less investor friendly, even though they do have the same growth potential over a long period of time. So let's get right into it. I'm going to clear the chart, remove this. We're going to first start by taking a look at the actual chart and the long-term technicals on Chinese stocks. And then we're going to discuss fundamentals on whether a bull market is actually justified in China. So we can draw out a long-term uptrend line from this low here, catching this reaction here, and this one right here. So this is a valid uptrend line on the Shanghai Composite. And so we recently bounced off of it right here, telling us that this uptrend, this long-term uptrend is still intact. In fact, we had a very impulsive bounce. You can see right here, a huge bounce off of that trend line. Now, second thing we need to draw on the chart is breakouts here. So we have breakout right here. This was a downtrend for a full year and a half. Stocks touched the uptrend line here, broke out of the downtrend line, and we had a bull market. Another breakout right here. We have a downtrend line from these highs here. Stocks reached the uptrend line, broke out, and we had a bull market right here. And keep in mind, these are massive bull markets. I think this was almost a 500%, 460% move up just within 2-3 years. And right here, this is actually from 2014 to 2015, 158% rally. These are huge numbers. This is the kind of returns you get over 10 years in the US stock market. So recently we had yet another breakout here from this high, catching this high here, right there. We touched the uptrend line, broke out very impulsively. So this is bullish. This is a check mark. This is obviously not 100%, but it does speak to probabilities of seeing moves higher. This is something we saw before each of the big bull markets in China. A touch of the uptrend line and then a breakout. I also want to take a look at the monthly because it is absolutely astonishing. This chart really gives us a good idea of the momentum switch in Chinese stocks. So we have the MACD right here. This is a momentum indicator. We use it a lot on this channel. And one of the ways it can actually be used is that you have a zero line right here in the middle, and anything above that zero line is an uptrend, and anything below that zero line is a downtrend. So when you cross that zero line, that means that you're switching trend. And so you can see it only happened a handful of times in history. In 1996, we had a crossover right here. That led to a massive move up in stocks right there. We had another bullish crossover right here in 2006, right at the beginning of the bull market, before another huge move up in stocks. Same thing right here, another cross above the zero line in 2014, right before a huge move up in stocks. And right here we have the same thing. Just this recent month we had a cross above the zero line right there. So again, this is not 100%. Nothing is 100% in trading, but it does speak to probabilities of seeing moves higher. When you have 3 wins for 3 trades, that is a very high probability of it happening again. So now let's compare the performance of the Chinese stocks to US stocks. And this is something that you have to do when looking at long-term investments, comparing markets to understand if they are overvalued or undervalued. So if we take the Shanghai Composite, this is the Shanghai Composite, and we divide it by the S&P 500, we're going to put SPX right here. You're going to get this chart right here. And so what this chart tells us is it compares the performance of the two. And you can see relative to each other, US and Chinese stocks have been pretty stable. So you could have been in either Chinese stocks or US stocks, and you would have had a very similar return, obviously with a lot of volatility in between. So I'm going to clear this chart right here. And so what you'll find out is very interesting about this type of chart is that if you can time the moments where you are invested in Chinese stocks for the Chinese bull market and US stocks for the US bull market, you're going to be able to strongly outperform both the Chinese stocks and the US stocks. So this is really where portfolio management really becomes interesting. Make sure to drop a like if you enjoy this type of content. If we see a lot of support for this video, we're going to put out more content like this covering other potential opportunities. Now, of course, this is very difficult to do. It's very difficult to time exactly the moments you have to be in Chinese or US stocks. And that's where you need to create a valuation range. So I'm going to clear this chart again, and we're going to put two lines here. We're going to put one at the bottom here. This is where Chinese stocks are undervalued compared to US stocks. And we're going to put a second line right here. And this is where Chinese stocks are overvalued compared to US stocks. And you can see this actually works generally very well. If you're able to successfully switch from one to the other, you're going to catch both the Chinese and the US stock markets back to back. And you can see in 2020, we are currently at undervalued support right here. Now, of course, this only speaks to probabilities. This is not a 100% trade. You can see right here in 2007, Chinese stocks continued rallying on into overvalued. This could very well happen now into undervalued, but the probability of that happening is lower than the probability of it not happening. Now let's take a look at the fundamentals of the Chinese stock market, and I want to take a look at a specific chart first. So this is a chart telling us where Chinese investors are actually invested. So the majority of Chinese wealth is actually in real estate, and only 4% of Chinese wealth is invested in stocks compared to the 29% in the United States. So what this tells us is that there is huge potential for growth of Chinese wealth invested in the stock market. And so going back to the Shanghai Composite, it really helps us understand the nature of the stock market. This is exactly the reason why Chinese stocks have these huge rallies very quickly. Because if that 4% number that we have in 2020 goes to only 8%, that will make the price of stocks actually double. And that's exactly what happened here. And that's exactly what happened here. And this is not something we have in the US, because we cannot go from 29% to 58% of investors being invested into stocks in a matter of weeks. It is much more reasonable to see a shift from 4% to 8%. So when investors start seeing longer term trends start to appear, they start piling into that, and that pushes stocks very high, very quickly. And so we can take a look at an article regarding this. This is a CNBC article regarding Chinese investors, and it mentions this shift in asset allocation. And if you look further down, you'll find out that the Chinese government is actually encouraging citizens to participate in the new healthy bull market that they are seeing in China. Now, of course, I do not believe in asset manipulation by the government, but I do think this type of headline can be a catalyst for this shift, which could send stocks much higher. Now let's discuss the Chinese recovery relative to the shutdown. And I want to take a look at a very specific chart highlighting this very clearly. So this is the percentage year-on-year change in exports and imports in China. So that would be the Chinese supply and that would be the Chinese demand, the two major components in an economy. And so you can see the 4 past months have obviously underperformed relative to 2019, but June 2020 has actually outperformed relative to 2019. This is extremely significant and very promising for the Chinese economy. If you illustrate that on a quick chart to understand exactly what that means, this would be June 2019 right here. This would be the shutdown. We have a drop in exports and imports, and this would be June 2020 right here. So what this looks like is the famous V-shaped recovery that so many economists say is impossible. Now, of course, this is just one piece of data and is not enough to support the case for a long-term recovery, but it is definitely something worth noting. And now, of course, US-China tensions that have been escalating recently can absolutely send stocks lower. I think that is a very big risk for the Chinese stock market in the short term. But looking at long-term investments, this is really the type of data you want to be looking at and potentially take advantage of Chinese stocks being negatively affected by US-China tensions in the coming weeks. Now, I hope you guys enjoyed this video. If you did, make sure to drop a like and subscribe if you haven't already. Also, make sure to comment down below what you think of the Chinese stock market. I do read all the comments, so drop down your thoughts, your ideas, and your strategies. It is always appreciated. And as always, good luck on your trading.